Good morning. Good morning. Welcome to Your Pretty Pennies with Tara Jones. I'm Tara Jones, your financial success coach, and I am live today on both Instagram and Facebook. And of course, this goes on my podcast at Your Pretty Pennies podcast and also my YouTube channel at Your Pretty Pennies. As you know, we are in the middle of, we're at the end of the financial spring cleaning series. It is day 3, and today we're going to be talking about updating your beneficiaries, policies, and tax withholdings. Now, the first 2 days was kind of fun, right? We cleaned out our purse, we cleaned up our financial house, we cleaned out, receipts and things like that. We designated a space to handle our money and our financial affairs from this point on. Day 2, we talked about cleaning up our credit reports, and if you haven't heard that, go listen to it because it's good, and it will help you clean that up quickly and easily. And now day 3, we're going to be talking about the rest of our financial situation, which is insurance policies, retirement plans, and also tax withholdings with the companies that we work for. All right. So before I get into that, I do want to talk about how you can work with me, because I've been getting questions for those who are new to me. I am a financial success coach, which means I do have a coaching calendar. So if you go to yourprettypennies.com/coaching, you can fill out an application in order to work with me. Or I do have an amazing online course called the Financial Reset Online Academy. And that is just like a DIY version of you being able to create a financial plan on your own. So we can create one together, or you can create one on your own. And again, that can be found at yourprettypennies.com as well. And you can click on the tab that says the Financial Reset, and you will find that. All right. And then also I have an upcoming event called the Moms and Money Workshop. I'm going to leave a link in the description, in my bios, on all of my social media pages. You can absolutely find out more about that event. But it's for moms or women, aspiring moms, just women in general who want to learn how to create financial peace for their families. So if you are a mom, a single mom, a wife, a woman who desires to be a mother or a wife, this workshop is for you. It's going to be Saturday, May 25th. It's a great Mother's Day gift. So any woman in your life, or a woman's gift, if there's any woman in your life that you want to bless with this, or you want to bless yourself for Mother's Day, or for a gift in May for yourself to come to my event, I would love to have you. It's going to be in Grand Rapids, Michigan. All right, so let's dig into this content. Number 1, let's talk about retirement accounts. So we need to clean up our retirement accounts. Number 1, if you have a bunch of them, consolidate them. You can consolidate them into your current retirement account. Again, as we get older and we switch from position to position, from company to company, we will tend to have retirement accounts at each of these companies that we leave. So the best thing to do is roll all of these retirement accounts into one. All your savings from your 401k that you've been contributing to your 401k at each job, roll them over to what you're using now. All right. You can just call each one of those companies and find out how to do that. It's very simple. All you got to do is fill out this form and let them know where you're currently contributing to your 401k, and they can send that money directly from where it is now in a bank somewhere or in a financial institution somewhere to where what you're using now. The second thing is about that is update your beneficiaries. All right. And so what that is you want to make sure that if something happens to you, that they know what to do with this money. They know who to contact. So make sure that you have that up to date. Make sure it's someone that's reliable. If you had a parent that passed away, and this goes with anything that you have beneficiaries on, right? If you had a parent that passed away, or if you're no longer speaking to your parent, or your parent isn't reliable, or if you just got married and now your point person is your husband or your wife, you need to update that in all of your accounts. Any account that has a beneficiary, life insurance, policies, anything like that, definitely look that up this weekend to make sure it's the person that you would want managing your money. You will want getting the benefits of what you've been building if something happens to you. All right. And then the other thing is increase your contribution or match. So oftentimes we go up in salary, we go up in pay, but we don't really increase how much we're contributing to our retirement account, or we kind of wait for somebody else to tell us what to do. So every spring, especially when I was working a 9 to 5, what I would do is I will go in and I will increase it a couple of percentages, right, until I got to 15%. So my suggestion is put 15% aside for retirement. So contribute at least a match. So if your company matches 4%, 5%, whatever that is, definitely match that, but go all the way up to 15% if you can. All right. So that's for retirement accounts. Number 2, insurance policies. This is a big one. Every year, I highly suggest individuals to get a new quote from a new company, especially for all your insurance policies, especially if your credit score has gone up and you have repaired a lot of your credit problems. And this is because oftentimes, like with your life insurance, with your renter's insurance, and your car insurance, that is based on a factor in how much you pay is based on your credit score. And so if you have, let's say if you work with Farmers Insurance, or if you work with State Farm or something like that, and they've been running your policy, let's say 4 or 5 years ago, and they've been using that same credit score, but you've increased your credit score by 200 points in the last 5 years, or 150 points, you want a fresh new quote with lower monthly payments, right? So definitely, let's say if you work for State Farm, go to Progressive, go to Consumers Mutual, or all these other insurance companies, independent insurance companies, and see how much a quote would be if you change your renter's insurance, if you change your auto insurance, and if you change your life insurance to someone else. All right, that's a big tip. And then also, if you are lacking one of the 5 main insurance policies, this would be a great time to invest in purchase one. So I always suggest you should have at least 5 insurance policies on yourself: health insurance, renters, or homeowners. Usually homeowners is tied into your mortgage if you get a home, so usually don't have to worry about that. But renters insurance for sure if you're renting, car insurance, life insurance, and long-term disability. If you do not have one of those 5, you absolutely should. And this would be a great time to go in and see how much you're able to negotiate, how much you're able to get some quotes, price those things out, see how much it will cost, and invest in yourself, protect yourself. Again, insurance is like having, so if your financial house is like your real house, insurance is like having ADT. Insurance is like having renter's insurance. So if something happens, you are covered, right? Most individuals, the reason why, if most individuals experience like a massive financial ruin, is typically because they have experienced a situation that could have been covered by insurance. So whether it was a break-in, whether it was flooding, whether it was a fire, whether it was a death in the family, whether it was your death, whether your spouse's death and you can't pay the bills because you relied on your spouse's or your significant other's income, whether if you had major medical bills and medical issues and you didn't have the right medical coverage, whether you got laid off or something happened and you got hurt on the job and you can't work as much, and you don't have long-term disability, which is you get checks coming in, 60 to 70% of your income coming in while you're recovering. Those type of things affect you. Those are the most common things that affect people when it comes to their finances. And so you want to make sure that you're covering yourself. So if you are not savvy on insurance policies and how to negotiate them, how much to take out, definitely contact me. You can email me at info@yourprettypennies.com and I can coach you through that if you are needing some coaching on that. All right. Now, the third thing is adjusting your tax withholdings. Now, I don't give too much tax advice on here because it's not one size fits all, and I'm very aware of that. So I'm kind of leery about what I say, but what I can say is oftentimes our financial and our lifestyle and our household situations change. We have babies, some kids pass away, some adults pass away, husbands, wives pass away, we get married, things like that. We move to a bigger home, we move to a smaller home. we adopt, we foster care, like all these different life events happen if we don't check into, again, our beneficiaries that we have, our policies that we have, and also our tax withholdings at our 9 to 5. So if you have a job and you get a W-2, you are able to claim or not claim tax exemptions. And that's what determines how much money is taken out for taxes each time you get a paycheck, right? And so you can increase those or you can decrease those as you are eligible for tax withholdings. So what I can say is go in there, go to your HR department, look up, or if you can go online, typically you can go online and see how much you are claiming for exemptions for your tax withholdings. So I believe it's a W-4. So if you call HR, if you don't understand what I'm saying, you can either contact me, we could do some coaching and I can walk you through this, or you could contact your HR and say, okay, I want to see what I'm claiming as exemptions for my tax withholdings here at this company, and they will walk you through that process. They'll let you know what you are, what you qualify for, what you don't qualify for, and it'll also be like on the screen if you go online and do it. All right, so those are the things I want you to get done by this week. And again, if you haven't seen day 1 and day 2, go back and watch those. They're on my Instagram, they're on my Facebook, they're on my YouTube, on my website, and also on the Your Pretty Pennies podcast. Go back and listen to those, day 1 and day 2. This is day 3. Make you a little checklist, right? So you can get your financial house in order, financial spring cleaning, and tackle this by this weekend, all right? I want y'all to be good and clean and clear and ready for the abundance, ready for the financial wisdom that is coming this year, the rest of this year, through Your Pretty Pennies brand, through me, Tara Jones, your financial success coach. And like I said, I would be remiss if I did not teach you guys and you ladies how to manage your money and keep it all streamlined, keep it all clean and clear as we go forward and learn more about these more advanced financial principles, all right? So thank you so much for joining. This was a short one. Write your list, get it done. Email me if you need some coaching, if you need help working through this. Also, again, there is the Financial Reset Online Academy available to you if you don't want to invest in coaching at that level. And also email me at Your Pretty Pennies with any questions. I take those questions and I make more videos from them. So that'll be great. If you have any questions, email me and I'll talk to you soon. Bye.